a lot of the main characters, some of the VCs, some of the market makers, they've all got poker backgrounds. It's not a mistake. It teaches you a lot of things that helps you become a good investor, helps you become a good trader.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show spotlights how to develop your own edge as a full-time crypto investor and trader. In this episode, we interview Revelo Intel founder and CEO Nick Drakon about his own refined process for how to discover and leverage information asymmetries in this bull run. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. Introducing Flat Money, the first decentralized, delta-neutral FLATCOIN built on Base with sustainable yield that's completely untethered from legacy finance. Because DeFi needs an uncensorable based unit of currency. You can mint unit with RETH, which is held in the protocol's shared liquidity pool, where it's borrowed by leveraged traders. As a leveraged trader, you can deposit your margin collateral and go long on RETH. If you're trading in the perpetual futures market, you'll pay unit holders to open leverage positions. If you're holding unit, you'll earn yield from liquidations, borrow rate, and trading fees. Preserve your purchasing power and offset your exposure to crypto market volatility. Learn more at flat.money. Power up your portfolio by borrowing, lending, and multiplying your favorite assets, made safe and easy by the industry-leading automation tools at SUMMER.FI. SUMMER.FI offers a curated DeFi experience to access the highest quality protocols and strategies. Discover new earn strategies for your portfolio in a user-friendly app designed to filter based on the tokens you hold, the networks you transact on, the protocols you trust, and the highest available yields. Learn more today at SUMMER.FI, the best place to borrow and earn in DeFi.
Introducing the MANTLE Liquid Staking Protocol, MANTLE LSP, a permissionless, non-custodial ETH liquid staking protocol deployed on Ethereum L1 and governed by MANTLE. With MANTLE LSP, users can stake ETH to instantly receive METH, earn yield and accumulate rewards the longer you stake. METH is the value accumulating receipt token that will give you access to expanded yield opportunities. Stake and watch your yield grow with MANTLE LSP.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing Avocado. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains in USDC. And native access to INSTADAPP's powerful, custom DeFi strategies. Avocado, one wallet to rule all chains.
All right, let's introduce Nick Drakon, the founder and CEO of Revelo Intel and the host of Revelo's podcast called DeFi Sparks. Nick, welcome to the Edge Podcast. How are you doing?
I'm doing great, guys. Thanks for having me. Appreciate the invite. I'm excited to talk to you both.
Part of the reason Nomadic and I were excited to have you on is if you just read through your Twitter posts, you give very pragmatic takes. And I think it's really important to ground yourself with those pragmatic takes when everything is so euphoric and exciting. And so we're going to talk a bit today about some of the ideas you have around developing your own process as an investor and trader. And I'm hoping that this is going to be a bit of teaching someone, to fish versus just, sharing, what we're bullish on in the markets. So, Nick, could you share just a little bit more about, your background and, of course, love to shine a light on Revelo Intel?
Yeah, I think it's important that, I like the way you put it around, people need to learn how to fish. It's not really the narrative that you see on crypto Twitter. Everyone's kind of following each other. We're all subscribed to 84 different bots with different alerts that let us know what's happening. That is just not how you carve out an edge in the market. So my background over 20 years ago, 22 years ago now, actually, I dropped out of law school to play poker full time in 2002. That's before poker blew up. in the US. An accountant by the name of Chris Moneymaker won the World Series in 2004. And then everyone got the idea that, we can chase this dream as well. And I started playing a couple of years before that. And I treated it like a job. I had spreadsheets, was doing calculations. All of this is automated now with all the software that's available. But what I really liked about poker and games like it is that there is a very clear path to you doing a certain amount of work and then you making money, right? It maps directly. As long as you play enough hands, if you have an edge, you will make money. You're going to see a lot of variance because that's how probabilities work. And that's why poker is such a great gambling game. There is the illusion, right? There is the illusion that luck plays a much bigger part in it than it really does. But if you play poker against someone who's better than you and you play them for, 50,000, 100,000 hands, you don't win. It just doesn't happen. So anyway, I was drawn to the game because I saw the amount of work that I was putting in was translating into me absolutely destroying people before people knew how to play poker. It's very, very early on. It blows up. Now, a lot more people want to play poker, and it's really a great time to be growing up during that time because and playing poker taught me a lot of things. You can see around crypto right now, a lot of the main characters, some of the VCs, some of the market makers, they've all got poker backgrounds. It's not a mistake. It teaches you a lot of things that helps you become a good investor, helps you become a good trader. So let me just go through two things which I think poker taught me, which has helped me become a better trader, actually become a profitable trader. The first one is learning how to lose small amounts of money frequently, right? The pain of you folding your hand and saying, I'm out, over and over and over and over again. You become desensitized to not winning. And that's important because, there's a famous quote, do you want to be right or do you want to make money? And the fact is that most of the time, you're not going to be right. So how do you make money in an environment where you can't predict everything correctly over and over again? Well, what you need to do is be very mindful of taking very small bets, a lot of them, and then cutting them when you're wrong, when you're obviously wrong, and letting your winners ride. So a poker, when you sit down at a poker table, especially if you're playing online and you're playing 4 tables, 8 tables, 12 tables, you're folding literally 75, 80% of the hands. You're just not involved. You're surrendering, saying, I'm out. I don't want to do this. I'm a bitch. I'm out. That's what you're saying. So translate that into trading now, right? Where there's all these different assets that you can trade. Let's talk crypto, right? You've got meme coins. You've got old legacy tokens. You've got new projects that are launching. You've got options. You've got perps. You've got spot. You've got all of these things that you can be doing. And it's very hard to know what the right strategy is at any given time. So the mistake I see most people make is they will enter a particular position for a reason. Maybe it's the right reason, maybe it's the wrong reason. Who cares? Now you're in. And now they get stuck. Their decision-making process is paralyzed. Why? Because I've already lost 3%. I've already lost 10%. The chart's going against me. This is hurting me. It's painful. I don't want to admit defeat. I keep going. And the problem with crypto is most of this stuff is worth 0 on a TAL duration. So it's not like you're buying a share of Microsoft and you got it wrong. Maybe you lose 10% if you got it really wrong. If you got it terribly wrong, maybe you lose a quarter of your money. But it's not going to 0 next month. Some of these things can literally go down 90% in a matter of days or weeks. So you holding on to something out of stubbornness is suicide. Absolute suicide when it comes to crypto markets. So what poker taught me was not to do that, right? And the idea is to make a lot of small bets for a particular reason, know why you're in the position, and then if the reason that you're in the position changes, or some news happens to invalidate the reason you were in, press the button, close it, go have a coffee, move on. That's really, really hard for humans to do because you're explicitly admitting defeat, right? And poker is literally admitting defeat over and over and over and over again. And if you hear professional traders talk about, how they risk manage their book, what they're trying to do is lose 2 or 3 units on their losing plays, but make 9 or 10 units on their winning plays. If you do that, that means you only need to be right about a third of the time and you make money, right? It's a lot easier to be right a third of the time than it is to be right 80% of the time, which is what most people on crypto Twitter are trying to do because of the stubbornness around remaining in the position. That's kind of like a long-winded way of me saying, if you want to make money in markets, learn to be okay with losing a little bit of money very frequently, right? You can't go broke if you cut every losing position at a certain point, 5% down, 3% down, 10% down, whatever it is, just don't hold on to the thing because you don't know when the next FTX is going to happen. And now you're stuck holding this stuff that's literally gone down 95, 98, 99%, and you're wiped out, right? So I'll pause there if you've got any questions.
I think there's a common mistake you see among like new crypto investors, and these are folks who don't have the background that you have. They are indoctrinated with this like idea that they just, hodl forever. And again, they're thinking about these investments, like you pointed out, almost like, like a Microsoft investment. Microsoft isn't going to zero. And I think one thing during the bull run that I've at least learned is when we have these pretty like, big dips in the market, these drawdowns that are like 30, 40%, which are generally like bull market types of pullbacks before you can continue, up to new highs. Yeah, I'm looking at it as an opportunity to cut my losers, and I've always got at least 1 or 2 there because, if I'm holding a number of tokens aside from like the most obvious majors like an ETH or Sol or Bitcoin, I'm checking, my notes and going back to like what you might call like a trading journal. But again, these are for more like longer term, maybe like a swing position, and thinking to myself, like, where was I wrong? Like, what's changed? What has invalidated my theses here? And I'm better off, to your point, getting out of like some terrible losing position there, just admitting that defeat, folding at the poker table and getting into something where I've got real conviction that, can continue to, some new high, or at least can be a more profitable trade.
Yeah, a good example of this phenomenon, if you like to call it that, is, the diamond hands, the hodl, and the pride that comes with saying that you're part of that cohort. It's borderline mental illness. And all you need to do is go and pull up a chart of any token that has had a big unlock, right? We can get to this a bit later. You want to talk about my process, but I run a long short book, which means for most of the year, I have an equal amount of long exposure and short exposure. I'm mostly flat. I might deviate 5 or 10% net long, 5 or 10% net short, but I'm not taking very large directional market risk because I don't think I have an edge there, right? I don't have a crystal ball like 74% of crypto Twitter. So as a result, I'm always looking for things to put in the short book. And the easiest things to put in the short book are the tokens where you have telegraphed a huge unlock. This doesn't exist in any other market, guys, right? When you're thinking about what moves prices, supply and demand, that's it, if we want to really boil it down. So when you've got a particular asset with $1 billion market cap, and and the whole market knows that 30 days from today, 20 days from today, 8 days from today, $1 billion worth of tokens are going to hit the market. Some of them might, be staked. Some of them might not be sold, whatever. If you've got $1 billion market cap and $1 billion being unlocked, you're going to get 10, 20, 30% of those tokens that are going to be unlocked, they're going to be dumped instantly. So what does that tell you? Well, what it tells you is because it's public information, people are going to front run that, right? So 30 days out of a token unlock, anyone that was considering a long position in a particular token that is going to experience that is probably going to pause and say, I really like PIP, for example. Here's a great example. Go and have a look at the chart of PIP. That a huge unlock a couple of weeks ago, 10 days ago, okay? It's been down only from $1. Why? Because PIP is a shit Oracle network. No one likes it anymore? No, because $1 billion worth of tokens got unlocked, right? So 30 days before an unlock, people that probably want to build a big position long are going to pause and wait for that inevitable downturn, right? People that own the token, looking at that and understanding that there's an unlock, might think to themselves, hey, I really like this token, but there's a ton of supply coming on board. Everyone knows about it. It's not a secret. It's probably going to halve in value over the next 30 days. I'm just going to sell my spot here and look to buy in at the inevitable lower price, okay? So now you've got one source of demand gone, and now you've got additional supply that's hit the book. There's another layer, right? Now you've got opportunistic people like me that are looking for things to put in their short book, and they're going, what's the easiest thing for me to short? Me trying to build a 50-page deck about why a particular token sucks, or me going and shorting the thing where 100% of its market cap is going to be released into the market in 30 days. Easy bet, right? Look at AVO, look at PIP. There's plenty of these examples. So the reason I brought that up, let's draw it back to what you said, right, is this idea of hodling. Like, you need to be sick to hold something that is $1 today, knowing that 100% of the market cap is going to be released in 30 days, and you're like, I'm not selling it. I'm hodling. So that really doesn't happen in a lot of other markets. And there is a lot of edge to be found just by doing common sense things like that. Like, most of my short book is literally built, not with me having some convoluted thesis about how a particular project is going to fail. I'm just looking at supply and demand. And when you've got huge chunks of supply hitting the market, there's only one thing that happens. We can argue in terms of the timing and how things get, how much it gets front run and what happens on the day of the unlock. You don't need to gamble on that. Just go 30 days out, 40 days out, and just ride gravity. So anyway, now I'm kind of going around in circles. But yeah, it's being able to let go of a particular name is one of the hardest things that most novice crypto investors find, and primarily because of this narrative that you're paper hands if you sell. Call me whatever you want. I'm here to make money. I don't care. Again, do you want to be right or do you want to make money?
Nick, a question maybe for like the long portion of your book. Curious if you kind of see a lot of those investments as trades or investments. Like, how do you, like, what is the consistency of what's in your long portion? Because I think we got a good picture of what's in your short side. I mean, maybe a small picture. I'm sure there's other things other than kind of stuff that's due for massive token unlocks. But yeah, what's like the composition of your long side then?
Yeah, so I don't have long-term crypto investments other than Bitcoin. It's not in the trading book. It's completely separate. I think crypto. I think Bitcoin is a complete, and we can get into this when we talk about the ETH ETF. But I think Bitcoin is a different asset class than the rest of crypto. It's fundamentally a different thing. It solves for a different problem. It is in a portfolio to achieve a very specific thing, which is betting that global currencies are going to collapse over a tail duration because of excessive government money printing. That's the bet, right? No other. It's a different thing. So I'm a trader. I have investments, real estate, stocks, Bitcoin. They're investments. They're things that I want to own. I understand why I own them. Some of them produce cash flow, etc., etc. Everything else that I do in crypto is a trade. Because I don't know if any of these things, individual things, exist in 5 years. I know Bitcoin does. Maybe there's an argument for ETH. And I'm not anti-ETH or anything like that. But there's just no visibility to me that me picking a particular token and saying, I'm going to keep this thing for 7 years, and I am almost guaranteed that it will be worth more in 7 years than it's worth today. I just can't say that about any of the tokens. Now, but what I can say is that the crypto market is going to be bigger in 7 years than it is today. So that's why I started Revelo Intel as a bet on the industry itself. But back to your question around the constituency of the long book, I'm typically looking to target a very specific time frame. In equities, that time frame is 1 to 3 months. There's quality reporting, so there's a reason that it is 1 to 3 months. It gives you enough time for your thesis to play out. What you're trying to do in equities is predict earnings, right, and cash flows. That over the long term, that's what equity prices do. For crypto, because things move a little bit quickly, a little bit faster, or a lot faster, and there isn't this quarterly cycle of information that's released, I had to change that time frame because there's literally no reason to have a 1 to 3 month time frame. So typically, my trades in crypto are anywhere between 2 or 3 days to 2 or 3 weeks. Sure, some of them might go to a month, but what I'm looking for is very specific catalysts, and an efficient way to express that view. There's not always an efficient way to express that view because of funding and things like that. So provided I can get the right execution. And that's what the long book is made of. Now, there are tokens where, I am fundamentally bullish on their prospects. Not to the extent that I'm going to buy them and put them in a vault and leave them there for 5 days like I would a share of 5 years, like I would a share of Microsoft or a bar of gold or Bitcoin. But projects that I think have legs and are going to grow and are going to get adoption, right? Some of those names could be, ThorChain, Rune, Nia, for example. You can go through your favorite ones that you think that, you think that team has the ability to continue to grow that business. And they are, periodically in the long book. It's not, I don't buy it and then say, this is going to be in the long book until, for years. No. If there happens to be a big pullback, I'm buying more Rune, right? And when it goes up 20 or 30%, I trim it. So I'm very incremental about how I do things. So in summary, specific time frame, very specific catalyst, or bounce back, right? Like if the whole market drops 20%, and this happens every few weeks now, you want to go and buy more of the things that you like, understanding that when there is the inevitable bounce back, that particular thing is going to outperform because you have enough data that tells you that's happened the last 4 times, right? So these things happen very frequently. So there's no crypto investments for me other than Bitcoin or Revelo Intel at this point in time. This is going to change, right? When governance gets worked out and the sharing of cash flows gets worked out, and I can treat a particular token like a share of Microsoft, then yeah, I'll buy these things and lock them up in a long-term portfolio and off I go. But the way that I do it currently is I treat every name as inventory, and it goes on my shelf and it comes off my shelf with no emotion, no attachment. I just don't care, right? I'm trying to make money. And I'm not trying to make more Rune or more ETH or more whatever denomination you want to use. I want to make more money. I can take that money, buy real estate, buy Bitcoin, buy whatever I want, but my book is denominated in US dollars. Not because I don't believe in crypto, but because I just think that's the most practical way for me to keep score.
Catch the tide of the mainnet launch of Puffer Finance. Whether you're an Ethereum staker or an aspiring node operator, Puffer delivers the decentralization revolution with its cutting-edge technology. Start with just 2 ETH to unlock the potential of native liquid restaking and maximize your earnings. Join the movement now and anchor your stake at Puffer.fi. Nick, has anything changed for you in relation to ETH, though, with the spot ETF? I'm curious if you could talk about, like, how are you thinking about ETH now that the approval has happened, what are some thoughts on like how you might play ETH? Like I'm thinking of like the way you talk through the example with unlocks. I love some of the assumptions you call out there that, thinking through like, okay, here's what I can expect to happen, over the next 30 days with some crazy unlock for a token. Can we kind of talk through that with ETH?
With ETH, I think that over the short term, consensus is too bullish, and over the long term, consensus is not bullish enough. Getting this thing approved isn't about ETH, in my opinion. ETH's just another token. It's another asset. Sure, it's probably the second best one we've got. Well, it is the second. So, but it isn't about ETH. It's not a stamp of approval on ETH as far as I'm concerned. The reason it's so bullish to me and why I think consensus is not bullish enough medium to long term is the way that it happened, right? And the fact that crypto, for better or worse, is a political issue. And one of the last overhangs on the crypto market is regulation and the outright hostility that the current administration has had for the industry, just as a whole, right? They keep losing in court over and over and over again, and they just don't care, relentlessly making a fool of themselves. That is outright hostility. That's not a very calculated way of operating as far as the SEC is concerned. So the fact that, the Bloomberg guys, for months were saying, this isn't going to happen. They said 25%, and they're going back to, well, we said 25%, guys. Give us a break. If you go look at all their comments, they basically said, it's never happening. It's not happening. It's 0%, right? That was the tone of the conversations that were happening. Now, I don't think they got it wrong. I think that when they said it's not happening, it wasn't happening, right? They're kind of plugged in. I think they have the luckiest jobs in the world because they can front run their tweet and no one's going to throw them in jail. I don't begrudge them for doing it, but that's a thing. And if you look at the price action on ETH, it dropped below 3,000, I think on the Friday or Thursday. And then it kind of bounced back. And it was, my tweets the week before the approval, I was just hammering ETH because it was the easiest short in the book. Things were going up and ETH was going down. It was like so weak, unbelievably weak. And it was in the short book. You move into the weekend and it flipped on a dime. If you're focusing on relative performance, which is what I do, because I don't need my shorts to go down. I just need them to go, up less than my longs. That's it. So I'm not really looking for absolutes. So I'm very, very focused on relative performance, even on short-term time frames, because it shows me when significant capital is moving into a particular name or not. It shows me those reversals. And over the weekend, everything was going down and ETH was going up. What changed? People I spoke to said, well, it's speculators thinking that maybe we'll get a surprise approval. And that's where the bid's coming from. I didn't buy that. The reason I didn't buy it is literally everyone in the world thought there was a no chance. There's not enough capital on the sidelines that would have that view. Sure, some random guy on Twitter might go, yeah, I'm going to put 10 grand on ETH because maybe there's a surprise approval. I'll roll the dice. Nobody smart was doing that explicitly for that reason. A lot of funds were buying ETH for a couple of weeks just because they thought ETH BTC had bottomed, not because they thought there would be an approval on the Thursday. That's a different bid. So anyway, on the weekend, you saw the strength in ETH build and build and build and build and build. And the reason is because these guys knew what they were going to do and word got out and you saw the bid. So ETH, and I was short a lot of ETH on the weekend just because it was so weak. My view is predicated not on, some deity in the sky. It's on the information in front of me at any given time. And ETH was underperforming everything. When it started overperforming everything, I didn't know what was going on. So I started cutting it. And the point I'm trying to make here is that people are underestimating what it takes for a government or a regulatory body to say no for 6 months. And then literally at the 11th hour say, fuck it, yes. What causes that, right? What causes that is a tap on the shoulder from your boss that says, stop fucking around. This thing needs to go through, and I don't need to explain myself to you. That's what happened. People got strong-armed into doing this thing. And what that signals to us is that the outright hostility, regardless of who wins in November, is certainly diminished, right? There's nothing to say that it's gone and that it's smooth sailing from here. But at least now, the stupidity of outright attacking crypto as an administration is now on their radar. There are people in the room going, this is dumb. We might lose voters because of this thing. We don't care enough about it. Let the kids gamble. Basically is the conversation that's happening in the room. So I think that people like me, one of the biggest bets I've got is that Biden doesn't get reelected. Not that Trump gets reelected, but that Biden doesn't. Because I thought that the market was mispricing the fact that he might not even make it to November. So that's kind of my bet. So when you look at my tweets, all you see is me, dunking on Biden and things like that. And you might get the view that, I'm pro-Trump or all these other things. And we can see this now where you're getting this splinter effect on crypto Twitter with people that are for Trump and people that are against Trump. And then trying to use that as an overlay for their views on their portfolio. It's dumb, right? I look at these things. I don't live in America. Who the president of the US affects me only in terms of the economic policy that they put out and what the Fed does and how I'm going to manage my book. But I don't care who wins. I'm going to react to that situation at that given time. But the mistake that a lot of people make in crypto is they're like, smooth sailing, right? The Dems have turned. Trump's going to win. Everything's awesome. That's a mistake. There's no guarantee that Trump's going to do what he says he's going to do, right? For all the things that he is, and I think, I think the world will be a safer place with him as president versus Biden, but that doesn't matter. He's a lunatic. He's very unstable. He's very unpredictable. And there's no guarantee he's going to do what he says he's going to do. That's number one. So if you're overly bullish on what happens in November, if he gets elected and you want to be ultra long moving into the election because the day he gets elected, crypto goes up 30%, I think that's a mistake. And conversely, I think, thinking that the current administration is going to, tack one way or the other is also a mistake, right? So there's just a lot of uncertainty politically. And what I would urge people to do is, whether you like Trump or you think, Biden is, incompetent as a president, whatever view you have, should only be relevant as it relates to your crypto book in terms of, zooming out and thinking about, is crypto better off politically today than it was 14 days ago? The answer is yes. That's all that matters. We can debate the quantum. We can debate the veracity. We can debate individual bills, how it affects stablecoins, how it affects it. Sure, that's a debate. But at the end of the day, I think that, moving over the next 6 to 12 months, a lot of the regulatory overhang is dissolved. I also think a lot of it had already dissolved organically because the SEC's, venom was proven to be, non-toxic, right? They just kept losing. Yeah. I think a lot of the market shrugged that off and that eventually they would cease their activities. had already been digested by the market. But let's get back to ETH. Okay, so ETF approved, paves the way for a lot of flows to come in, and people are trying to map the flows into the BTC ETFs to what might happen for the ETH ETF. I think that's a mistake. And the reason I think it's a mistake is fundamentally, Bitcoin is a different asset class to Ethereum, right? Sure, it's a crypto. I get the fact that it's all part of crypto, but think about what the purpose of Bitcoin is in your portfolio, what the narrative about Bitcoin is, and then now let's do ETH. They're fundamentally different things, right? One of them is a store of wealth. It is censorship resistant. It's got a fixed supply. It's owned by, notable financial billionaire wizards, Stan Druckenmiller, Paul Tudor Jones. It's owned by corporations. It's owned by governments. Everyone agrees that it is a fairly efficient way of betting on governments deflating, governments inflating the money supply by printing more money, and everyone understands that. You don't need to be a PhD in economics or a trader at Susquehanna to understand that what the governments have been doing for the last 5 years has made the dollar or the euro or whatever, the yen that you've got in your pocket worthless. Everybody understands that. As a result, I think flows into the Bitcoin ETF have a much clearer path to adoption because of that. Now let's talk about ETH, right? Does Stan Druckenmiller own ETH? Does Paul Tudor Jones own ETH? Are there any governments that own ETH? What corporations have ETH on their balance sheet? Different from the outside looking in, right? If you're just watching CNBC, there is a fundamentally different story you're being told about Bitcoin versus Ethereum. This is not to say I'm pro Bitcoin and anti-ETH, right? What I'm trying to say is that trying to map the inflows into Bitcoin to the inflows that may or may not come into Ethereum is just framing that problem in the wrong way, in my opinion, right? I might be wrong, and people just might be like, crypto, buy. That's also a thing in that a lot of these market participants may just not go into the depths of that explanation, not really understanding the difference between ETH and the difference between Bitcoin. But some will, right? Bitcoin's got no competition. Ethereum does. If you say, well, Ethereum is supposed to be, power decentralized finance, NFTs, unlock all of these different activities, sure, Solana can do the same thing. So it's got competition. We're not going to argue whether Solana is better than Ethereum. I don't care. But it has competition. Bitcoin doesn't. So as a result, I think that anyone trying to predict that the ETH inflows is going to map in some kind of way to the BTC influence is going to be disappointed. For that reason, I just think that a lot of these market participants do not understand ETH the way that they understand Bitcoin. I think they will eventually. So over a tail duration, I think this is great. I don't think by any means that the ETF is bearish. But I think it will take a lot longer than the Bitcoin adoption. These sales teams that these ETF issuers have are very good at their job, but it takes time. And Bitcoin is just the easier thing to explain. So I think that will be the first port of call if you're going to allocate. If you've got no exposure to crypto as an institution, you buy Bitcoin first, I think. And then you understand that. Maybe, you go back to your board, you get, people need to digest these things. So I think ETH comes a little later on. So my base assumption is that the ETH inflows are going to disappoint short and medium term. I'm not betting on that. I don't have a strong view, as I've said, but that's my personal view.
I think that's an interesting point with the short to medium term time frame, because I do agree that I think short term, like Bitcoin just continues to have like the killer narrative around like digital gold. But I do recognize that I think among like, TradFi investors, there's a real edge to be had for those who do wrap their minds around what is Ether. And I think it's been indicated, if you're looking at like some of like, the market wizards of TradFi, like a Ken Griffin, Carl Icahn, Druckenmiller, Ray Dalio, even Jamie Dimon has said things that, like, while Jamie Dimon, has been, I think, extremely wrong about Bitcoin, they've expressed they've expressed an interest in Ether. I mean, I'm reading like Jamie Dimon said something like he believed Ethereum actually has use cases, whereas like a Ken Griffin came out to say something like Ethereum will replace Bitcoin. So long story short, I think that aligns with what you're saying about like the short to medium term, who knows with the ETF inflows. But I think, this is a watershed moment for the industry, for crypto assets. I think we will see a SOL ETF in the future. No idea how long, guessing it's going to take some bit of time. But like all of the barriers that were in front of us with regulators, they're not gone, but things are extraordinarily better than we were, as you pointed out, 14 days ago. So it's really exciting. I just can't imagine not having some long exposure to like majors like a Bitcoin, Ether, Sol.
I'd also just add that like I think there's a lot of meatiness for like TradFi analysts to really dive into ETH on rather than Bitcoin. Like Bitcoin has the digital gold narrative. ETH has, some sort of cash flows. You can draw some parallels to maybe like tech stocks. And I think ETH could be looked at as a very new, shiny tech stock. I don't disagree, though, that like the narrative will take time to roll out. But I think it's going to be like really interesting just to see how they digest it and what they land on as, okay, what are we calling this and why are we investing in this? And the reasoning that they come to on that will be, I think interesting to play out.
Yeah, look, it's a good point. That absolutely there's a lot more to analyze when it comes to ETH, right? You could call Bitcoin your digital gold, right? So we understand what it is. The problem is, as a TradFi analyst, once you start diving in and you look at the cash flows compared to the market cap or compared to the price you're paying, it's abysmal. Like, if you try and overlay a real world valuation framework onto ETH using its cash flow, it doesn't paint a pretty picture yet. If you then dive into the constituency of that cash flow, what activities is generating that, right? You got NFTs, you got meme coins, you've got DeFi, right? 2 out of 3 of those things are, pretty much, if you're coming at it from a TradFi world, you look at the meme coins and the NFTs and go, this isn't a thing, right? This is not something that I can hang my hat on and go to my boss and build a long case for this thing. Now, DeFi is very exciting, but it's very nascent, right? You've got the smart contract risk, you've got all these rugs, all of these hacks. So I think from a deep fundamental analysis standpoint, for anyone outside of crypto, if they dig in and they start poking holes, they're not going to like what they see yet. So that's also why I suggested that ETF inflows are going for ETH specifically will disappoint not just in the short term, but also the medium term, where the medium term could be a year or two, right? It's not just understanding it. If you understand it and you look under the hood and you see NFTs, right? Have a look at trading volume for NFTs over the last 12 months. Down only, right? Have a look, we've got all this chaos going on right now with these celebrity grifters aided by Ansem who can't help himself. It's one of my concerns that once serious people start analyzing the DeFi aspect and all these different L1s, because the constituency of a lot of that activity is, and we would all agree, complete bullshit today, they paint it in the wrong light and they move on. So I think that doesn't go away very quickly. The regulatory clarity is fantastic, But there is a significant and material need for regulators to come in and stamp out some of this very obvious bullshit, because it paints everything else we do with the same brush. So I don't think we help ourselves in any way. So I agree, Adam. Once you start analyzing it, I think certain good things happen, but I do think if they look at the numbers today, they're not going to like what they see.
Tether is a decentralized protocol that enables anyone to borrow or lend using any Ethereum asset. You can think of a Tether loan as a DeFi cash advance, one where you can use any of your favorite ERC20 tokens as collateral to get an instant USDC loan. Discover the power of a DeFi cash advance today at Tether.org.
DeFi enables a whole new world of trading and yield opportunities. Sometimes we all wish we had a little bit bigger of a budget so we can make the most out of it. That's why we created Blueberry. Blueberry lets you access the best opportunities on Ethereum all in one easy-to-use terminal. You can access 5x, 10x, or even 20x your money in one click, more than any other lending market, so you can maximize your earnings. Only on Blueberry.
Nick, let's pivot a bit. Kind of curious your take on, do you think there's still a lot of informational asymmetry in the market right now in the crypto markets? And if you do, how long do you think that lasts? Or is that gap being closed?
Yeah, good question. The short of it is yes. Whenever there's an edge, the gap is always closed. When I started playing poker in 2002, no one knew what they were doing. If I tried to play poker for a living today, I don't think I'd be a profitable player. These kids are whiz kids. It's a different game. They've got solved. It's just advanced so much. So yes, edge is evaporated. So you constantly need to find new ways of carving out an edge. Is there information asymmetry today? Absolutely. Right? Why do you think Ansem's on these spaces with these D-list celebrities? Love of the game? Mass adoption? Right? That's his information asymmetry. Okay? It's not the only one, right? But the fact that this is an unregulated space means that people with information are going to have an edge over people without that information. In regulated markets, there are rules around that information, and it's very highly guarded, and there are severe penalties, right? If you try and cheat in the equities markets, you get caught almost always. And the reason is the SEC is very, very good at identifying who's cheating. How do they do that? The options market. If you're going to cheat, you go to the options market because you can get huge leverage. You can't get 100x leverage in equities. There's no Binance, there's no Bybit. You can't do that, right? So if you have information, you go to the options market. Now, it's very, very easy to see abnormal activity in the options market. Everyone is KYC'd in terms of which accounts are buying these calls 3 days out of a particular, you can go back and work out who did what and how much money they made, and they go to jail. You can't do that. So, you've got that component, inside information, whether it's nefarious or not. So what inside information is not nefarious? Well, I can't call up, right, Zuck, and say, hey, man, tell me what you're working on in terms of AI over at Meta. Let me know what's going on. I'd love to hear about it. Let's jump on a call. Can't happen. And if you did know him, he's not allowed to tell you anything. He doesn't want to go to jail. But you can go into any Discord for any project, bar maybe a dozen of them, and get someone on the team on a call with you to tell you about what they're working on, right? It's not nefarious. People want to do that. It's a very collaborative space. I like that. But because there's no rules and regulations around it, and because most of these people don't understand the responsibility they have from being a market participant, they have loose lips, and certain people can get information at certain times and profit off it. That's the non-nefarious inside information category. How else can you get information asymmetry? We gave the example earlier around token unlocks. That's public information. You're not cheating. But because people are lazy or they lack the skill or the foresight or whatever it is, right? There's the meme of this is who you're trading against. Yeah, well, there are a lot of people that are just not very good at this game in the crypto markets. And they neglect to seek out information where it's available. And they will hold a token 30 days out from an unlock the whole while you're shorting it, right? That's information asymmetry right there. It's available, but no one's using it. And if you go and study, Wall Street over the last 100 years, there are all of these examples around some of the masters of the universe carving out an edge by doing bits and pieces of this, right? Playing golf with a CEO. Yeah. There was a story the other day around the owner of Universal Pictures also owning distribution in terms of theaters. And he would get advance copies of a movie because he'd need to exhibit it in his theaters. He would watch the movie, and depending on if he liked it or not, he would go and buy Disney stock, or he would go and buy Paramount stock, right? So obviously that gets closed down over time, but there is so much information asymmetry available right now in crypto, even if you don't want to play in the dark arts of the gray area around inside information. There is a lot of information that you can access by talking to people, by looking at data, and just, doing work. It's difficult to do that in equities because your competition are multi-billion-dollar hedge funds with 84 PhDs and supercomputers in the basement that are doing all of this, right? And you're just not trading against those people in crypto yet. You will one day, but not today. So, yeah, Adam, I think that there is tremendous edge to be found. You pick your poison in terms of how you want to do it. For example, maybe, you want to set up some automated bots to do, funding rate arbitrage. That's not inside information. That's not illegal. But you have these situations in crypto that don't exist in other markets, right? Where you can get paid to long a particular asset in one venue and then get paid to short the same asset in another venue. You can't do it in perpetuity, but maybe you can get 2 or 3 days out of it. So, and there is software that you can, purchase or build that can give you this information. So I think the areas of opportunity are vast, even today. And they're closing rapidly because there's a lot of money to be made and sophisticated actors are moving into it. There's a tool that we pay for at Revelo, a team we love, by the way, Kaito, Kaito. And they've, you use it? Yeah. So we met the team, we hung out with them in Dubai. I, had several calls with them. We're going to make some of our Revelo Intel research available on the platform. But what this does, for those that don't know, is it's an AI that they actually use AI. Everyone says they use AI, and this is an AI powered intelligence platform that grabs data from all over the place and gives you metrics on what's happening. They've got token mindshare, they've got narrative mindshare. So my point is that if you've got access to this tool, and by the way, it's very expensive, it's about $1,000 a month. But if you have access to that tool and you spend 8 hours a day looking at that, being well-versed on unlocks, having conversations with smart people in the space, spending as little time as possible on crypto Twitter, right? And you can make a shit ton of money without breaking any laws. So I think it's a great time to be a enthusiastic, motivated, and hardworking crypto investor / trader if you're focusing on the right things. And having notifications on for Ansem is not in that category. Keep picking on Ansem. There are a lot worse guys than Ansem, but, he's the main character right now. So that's the reason. But it's a metaphor for, whoever you're following that's more of an entertainer than a real market participant.
I think that's some great inspiration for how to develop your own edge, in this space. Actually, this is a good lead in to, I appreciate you've been very, I think, soft-spoken about Revelo Intel. And so I want to spotlight Revelo. So aside from Kato or Kaito.ai, which is a fantastic tool, can you just share a bit more about, like the edge you can gain with Revelo? And then also would love for you to touch on Revelo Ventures as well.
Yeah, thanks for the opportunity to do that. So I started Revelo Intel in February of 23, so it's about 18 months old. Very simple thesis. I'm a market participant. I've been trying to pick winners and losers. That's hard. But what I am certain of is that the crypto asset class, right? And we can argue about what the constituency of that asset class looks like in 5 years. But that asset class is going to be worth a multiple of what it is today in 5 years. I'm certain of that, right? I don't think there's very many scenarios that I can envisage that would make that statement untrue. So what kind of business could I create that could express that view? A research company that has customers that consume information, valuable information, is something that will be around in 5 years and will be a bigger business in 5 years than it is today if the industry grows. It's a very simple bet, right? Nothing more complicated than that. It's a bet on crypto being bigger. So what is it? It started off with us getting humans to watch all the podcasts that we thought were valuable and create notes, but actually having a human do it, not an AI. Zero AI involvement. That was kind of my first idea because there was so much information out there. I would pay people myself personally to watch podcasts, write me notes, crypto native people, so that I didn't have to watch an hour podcast. I could read 6 minutes of text and get the information. So that was one of the things that we started with. But what it is now, there's 7 or 8 different research products. We do project breakdowns. These things can be 100 pages long. And they're specific on one name. If you think about all the information about a project that exists, you've got information in Discord, you've got docs, you've got podcasts with the founders, you've got spaces, you have Medium articles. It's very fragmented. And projects are not very good around keeping all of that up to date and in the same place. So what a project breakdown does, 2 or 3 members of our team go and learn everything they possibly can about a project. They read all of that. They consume all of that. They put it in one place with adjustments. A lot of the times when we read the docs from a project, I can't understand them. I'm not a technical guy. Sometimes it's a mix of marketing fluff and overly technical stuff so that devs can feel smarter than what they really are. It doesn't serve the purpose of what the docs are supposed to be, which is to explain it to the users what the thing does. So we take all that information and we produce something that everyone can understand, an all-encompassing document, and then we update it in real time. So think of it like an encyclopedia volume for Curve or Yearn or Thought Chain. The Ethereum one's a couple hundred pages long. The Bitcoin one's 300 pages long. But think of it like a resource that you can go to over time, pull it off the shelf, flip it open, and go and read up-to-date information about that thing. It's really what projects should be doing, all projects should be doing, but they don't because they're focused on other things. So that's one of the products. Another product is what we call market intel. These are investment memos, right? These are 30, 40, 50-page reports diving into a name with a particular view. We don't do short views because we don't want death threats in our DMs. It's, that's just the world we live in right now as it relates to crypto. You can't badmouth anyone's token, so we only focus on long ideas. We provide catalysts. We provide data. We provide our view, our opinion. We use specific tools to reach, to come up with those ideas. We research them. We provide the risks. So this is what we think is going to happen. And if these 2 things happen, then we were wrong and we're out, right? So it resembles buy-side research that you would see in a fund or something like that. Like if the three of us were managing our own money and I had an idea for the two of you, this is what I would do. I would put together a 30, 40-page report with all my work, and I say, guys, have a read, let me know how I'm wrong. So that's our flagship product. And then we do industry intel reports, which is the same thing as I just described, but not on a specific name, on a specific narrative or a specific category or a specific chain. It's more general in nature. So, you know, the Revelo Intel is useful for traders and investors that want to do fundamental work and want to actively trade their book. That could be on a 3-month time horizon. Like these are not, we don't draw lines on charts, right? We're not talking about this is a trade for the next 2 or 3 days. We're looking to target, you know, a 2-week to 2 or 3 month time horizon with information. We've got a private Discord channel that's only open to paying members where we discuss all these ideas. So there's a few hundred very sharp people in there, all reading the same information, all discussing it, dissecting it. This is why we're wrong. This is why you're wrong. Other people that aren't part of the team also share their ideas. So, you know, it's not for everyone in crypto. It's also, we do a lot for free, but it's a paid product. It's $150 a month or $1,400 a year. But for people that are doing this work on their own, if they like to dive into a project and build their own breakdown, if they like to write their own investment memo just for their own process, if they like, you know, going through, you know, performing those activities on their own, then you should try Revelo Intel. And we're constantly expanding. We've got 15 or 16 analysts now that are doing a number of different things across the board. And we launched Revelo Ventures 2 months ago, I think the last week of February. So Revelo Ventures is we invest in early stage deals. It's a membership group. There's an NFT that our paying members on the Revelo Intel side had the opportunity to buy and participate. It's over 100 members right now. And we do a deal a week. The way that we do it is my team and I decide to invest in a particular project. So we put our money in and then we size it up and make it available to the syndicate. So we've got skin in the game. Any fees that we take are in tokens in the particular deal. We don't take USDC or anything like that. So we only make money if the deal's good. That's it. And it's a closed group. If anyone wants to join, you can DM me and we can talk about it. Certainly not for mass market. And we've got people in that group that, you know, they're doing 25, 30K on every deal. So it's a serious group of individuals. We're having a great time. I think the market's very frothy for venture. I think it's a minefield, actually. But there is money to be made if you believe that, you know, this bull market is going to be sustained. And if most of the overhang around crypto is dissolving in front of our eyes right now. So yeah, we're doing deals at 40 million, and I think we did a deal at the biggest deal we did was at $500 million valuation, private round. So that's frothy. Right? That is very, very frothy. But you need to play the cards that are in front of you in any given moment, and you know, sometimes it's worth paying a premium. And I think at this time, there's some money to be made on venture. So that's been very exciting for us. We're growing that team as well.
By the way, I can attest to just the value of the sort of deep analysis that Revelo does. I mean, we've used reports to actually prep for interviews before, so I definitely could not recommend enough, you know, taking a look at revelointel.com. There's all sorts of tools there beyond just the reports, but again, it's very difficult to find that sort of analysis in the space. And for what it's worth, I think the price tag is far below the value of what you get on a month-to-month basis. I also want to remind our listeners that beyond revelointel.com, they should follow Revelo Intel. That's the handle on Twitter. They should also follow Nick Drakon, which is his handle on Twitter. And then you can find all of that in our show notes, including a link to the DeFi Sparks podcast. So, Nick, thank you so much for coming on with us. I want to just give you the final word. Maybe you could close us out with what's a component of the investor research that you all do at Revelo that you think is undervalued? Like, basically, if I'm looking for my own edge in this space, is there any, part of the due diligence and research you're doing that you think is misunderstood or undervalued as it relates to newer protocols?
Look, instead of patting ourselves on the back and talking about how good our work is, I think the greatest value you can get from something like Revelo is being exposed to a process or an output before making an investment decision, right? Just because someone talks about it on Twitter or some guy trader you follow in a Discord says buy something, you going and buying it doesn't help you, right? You haven't learned anything. You can't generate your own ideas if that's all you do. So being exposed to research firms like Revelo and seeing the reports that we put out and reading them gives you a template for what kind of work you should go and do on your own if you have the desire to do so, right? What does the output look like? And then reverse engineer that and say, right, they've analyzed the tokenomics and they've come to these 3 conclusions. I'm going to try to do that on my own. I'm going to pull up the tokenomics of a project and I'm going to write it out like they've tried to write it out. And then I'm going to share that in the Discord server with other smart people and get some feedback, right? Once you can do that, not consume the information and then stop. Consume the information and think, right, how can I use this to inform my own process and maybe build out my own process, right? A very simple thing, just do this. Go to tokenunlock.com. I'm not affiliated with them. I don't have a referral link or anything like that. Just go there and then look at the token unlocks over the next 30 days. Pick 2 or 3 of the names that have a big unlock that you also are aware of and just run a test and say, I'm not going to put any money on this, but I'm going to see if I can predict the trajectory of the price of these 2 or 3 tokens, right? And I'm going to make notes at what inflection points they catch a bid, at what inflection points they keep getting hammered. And I'm just going to go through that process, right? As opposed to me telling you what token you should short and put in your short book, right? You don't need Revelo or Nick or DeFi Dad or Adam or anyone else to tell that to you. So again, the biggest value I think you can get out of Revelo is being exposed to what the work looks like and then taking parts of that and being able to teach yourself how to do some of it, or at least think about how to do some of it. And then if you could do that, you can become a fisherman instead of, trolling Twitter or Telegram bots to generate your ideas. That's not sustainable. You're not a profitable investor or a trader if that is your process, because you have no process. So that's what I'd leave it with.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.